Toronto real estate prices are falling fast, but buyers, they're frozen. The latest Royal LePage report shows that first-time home buyers are nervous, waiting on the sidelines even though the market looks better than it has in years. So if prices are dropping, why is nobody buying? Let's dig into the real reason behind this hesitation and what it means for you. Hi, my name is Zen, and if you enjoy my data-driven and number-crunching real estate updates, be sure to like and subscribe. The Canadian housing market is ripe for possibilities, but new buyers are taking their time. And I completely agree with this fact. People have all the reason to be taking their time. So in this report over here says that 13% of Canadian adults say they are actively working towards the purchase of their first residential home within the next 2 years. Now, I will preface this that Royal LePage does come with this report quite often, and the number of pent-up demand buyers in the pipeline tends to always skew higher. And I can say things change, life change, prices change, financial circumstances change. So I wouldn't take this with 100% accuracy because it's more of a sentiment reader, but it's a good barometer regardless. And of this small group, a small portion saying they're working towards the first purchase within the next 12 months, which is a very small, but the majority, 82% of them say they're planning to make a purchase in the next 12 to 24 months. Because right now, again, from my perspective, if we're talking about first-time home buyers, we're specifically talking about condos. Yes, there are some first-time home buyers that are maybe buying townhomes that are upwards of $1 million, maybe a little bit over. And that area is a little bit stronger than the condo, but most people are in agreement right now that waiting is actually going to be beneficial for you because potentially there could be some prices coming down. Now, granted, a lot of people, when they're trying to buy their forever home, isn't going to be necessarily trying to time the market or time the interest rate or time a lot of things. It really comes down to a personal need. So from the real estate sales perspective, there's always a joke on the inner side that basically says death, divorce, or debt. Those are reasons that people have to buy and sell real estate, and that happens all the time. But as this article is saying here, a lot of people are on the fence right now because of the uncertainty of the economy, which I've talked about a lot in the past. And there's an abundance of choice that leads to a lack of urgency. And I can tell you, I'm seeing this right now. I have been saying we are getting calls from first-time home buyers who are, one, trying to look into the market, two, seeing what kind of deals are out there. But thirdly, they're just trying to see what's out there right now, and there's no urgency. And even if our buyers like a property, they're not kind of like, oh, let me write an offer for you and submit it to you right away. That's not happening. A lot of people from our perspective and our vantage right now are say, hey, I like this, let's shortlist this, but let's see some more properties because there's so many choices. And we haven't had this in a very long time. So for buyers, it's a very comfortable, slower moving pace that's less frenetic. So that's probably what this article is talking about. It's ripe with possibilities. It's just slower and it's good for them. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, but decades of experience to work for you. But is it going to change? Who knows? I don't know. I'm not trying to predict that in this video right now or show you any charts. I'm just trying to show you and tell you the psychology that I'm seeing currently in the market right now. Now, in this report that Royal LePage does quite often, they basically survey a few thousand people to talk about their buying intentions to kind of test the market. And I will say, most people are trying to buy a property in some way, shape, or form, whether they're able to or they're qualified or life circumstance changes. It's not a good metric, okay? Let's just put it that way. But the most important thing when you're trying to make the biggest purchase in your life, generally for people that are buying their first home, is that they are looking for economic certainty. Because right now we have economic uncertainty. And this is particularly relating to the US trades relation and the signs that there could be some stability. And when you are an educated buyer, like some of our buyers, when we tell them what's going on, you're thinking, hey, if there's uncertainty, maybe I'll wait it out a little bit. And if there's so much inventory and prices do have pressure to come down, choosing to wait in hopes of a better deal is likely to happen. So this is why a lot of people are just looking at properties, seeing what's out there. And unless it's like a 12 out of 10, they're not really ready to pull the trigger. Like in 2021, people are happy to settle for 7 out of 10 because there's no choices and they'll be throwing offers at these 7 out of 10s. But now buyers want like a 12 out of 10, a 13 out of 10, a 14 out of 10. The expectations are just that much higher when you have so much inventory that's loitering around right now. And speaking of 12 out of 10s, what a 12 out of 10 means right now in this article is that finding a home that is move-in ready. So that it's turnkey, it looks good, the layout's good, the floor plan is good, the exposure is good. If it's a condo, it's not blocked. That's what a 12 out of 10 looks like, and it has to be priced very well. So maybe priced like a 10 out of 10. But when it comes to price related factors, if you're going to buy, let's say, a 6 out of 10 or 7 out of 10, you better be priced like a 4 out of 10 or a 5 out of 10 in this market to sell, because that's more financially motivated buyers, and they only want to buy that non-12 out of 10 because the price makes sense for them, whatever the value and the price they assign to your property is. Now, some other interesting stats that was pulled from this article was that more than half, the 51%, said that they would not receive any help, which is actually quite interesting. While 41% of the first-time homebuyers said that they would have some kind of help. So this is talking about like family gifting money or lending money. And on that note, they say that 29% of that cohort, so this is like, 29% of the half, say that it will be a lump sum payment with no repayment, meaning that they're not expected to pay it back, whereas about 27% of them are basically expecting to pay back. So it's kind of like half somewhere. And the other 28% here is saying that they need some help qualifying for the loan, where someone goes on title. And finally, the other last 26% saying that they're going to have help paying off the mortgage. And I can tell you right now, and now that we're like 1 month into the fall market, so when this goes live, it will be past October, the market isn't going to rebound, even with the interest rate cut that we had recently. And the next one isn't coming until October 29th or 30th or something at the end of October, when we're getting towards the tail end of the fall market. So I think things are going to stay this way. It will still remain kind of like a quasi soft buyer's market, and you really have to be priced right to sell. But where things may get different, if say the economy gets better, maybe we get another rate cut. And again, I'm just saying all the positive things that could happen in the real estate market. It's not something I agree with, but if all of these things kind of line up, what we're going to see is potentially an S-curve style adoption. So what the S-curve basically talks about is, from a social or psychological perspective, a lot of people don't want to be what we call an early adopter, or in this case, a contrarian, because people have generally, good or bad, a herd style mentality. They want to fit in. They want to be part of the consensus. So if you are the one person who's buying a property right now when everyone's like, oh, you should never buy, renting is better, etc., you're not going to buy. There is no, call it, social pressure to buy. But what usually happens, and why a lot of the times when the market kind of goes click like that, it's because everyone has the same mindset and the herd perspective kind of converges in right away. Maybe instead of coming in around 5,000 sales every single month and averaging 60,000 when we should be at 80, maybe we get back to that 10-year average. So maybe sales increase by 20-30%. It's still not going to absorb all the existing inventory you have, but I'm just saying things will probably move at a faster pace if all of this aligns. And usually what happens on that case is like the first few months you have your early adopters. So there's a little bit more consensus, and then they start getting to market. And then when you start having your headline saying, oh, real estate market has picked up in May or something like that, we're like, oh, prices are up 3 months in a row. Oh, maybe the market is back, kind of thing. And that's kind of when you start having the late majority of the people kind of adopting afterwards. And that's usually how I see the market changes. It's usually conversations that are had, and then you have some people trickle in, and then once the media kind of latches onto it, it's almost kind of too late. And I say this not because you should buy as an early adopter because maybe you got a better price, or an early majority or a late majority. I'm just saying this is the psychology of what likely is going to happen if the market rebounds, and I'm saying it will. But you also have to look at the other side of the argument where, hey, if you're not in a dire need right now and you cannot find the, call it 12 out of 10, or the perfect property for the perfect price, or you may think there's more downside to go, it makes sense to wait. But just understand that you won't know when the bottom is. And whatever it is that you buy or sell, it's not relative to the average price in the entire market, because you could create a better deal and you could be that one-off that makes a deal. And I've been saying this for the last little bit. For you to get, quote unquote, the best deal, or call it get a 12 out of 10 for the price of a 9 out of 10, you need to be able to create those opportunities for yourself when the market is really bad, where sellers are willing to let it go for those prices. And that's kind of what I talk about in this video about a lot of distressed buyers in the current market right now. So make sure you check out that video. Until next time, your move, your future. See ya.